Hi, welcome to the Fintech Times Presents series of webinars. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. So firstly, I'd like to say hello to our audience online. Welcome. Today, we're going to be talking about Insurtech and the impact of COVID. Really like it if you could follow the conversation using the hashtag Fintech Times COVID Impact and follow us at the Fintech Times. COVID-19 has driven rapid technology adoption in the insurance sector, from buying and selling houses online to having cars delivered to your doors, and the increase in different forms of mobility and transportation. But how has this changed the way insurance companies quote, forward plan and pay out? This webinar is going to look at the technologies adding to the sector, how it might affect the sector as a whole, and also where the sector may be going into the future. We've got a great group of people today for the discussion. So I'm going to invite each of them to come onto the screen and give themselves a quick introduction. So I'm going to start off. Ori, perhaps you could give me a quick overview and introduction.
I'd love to. First of all, thank you so much for having me on this webinar. Exciting. My name is Ori Blumenthal. I'm co-founder and CTO of VOOM Insurance. I like to say that I'm a tech geek turned insurance nerd. And a word about VOOM. So basically, we're a full stack digital insurtech company specializing in new mobility segments. We create and distribute innovative new products for those segments. Typically, it's data-driven and usage-based insurance designed for high-risk, episodic usage within mobility. That could be drones, e-scooters, e-bikes, motorcycles, light aircrafts, you name it.
Awesome, thank you very much. And maybe Steve, maybe come to you and give us a quick title and intro.
Thanks, Mark. My name's Steve Dukes. I'm COO at Confused.com. We help consumers save time and money by choosing a range of services that they use in their life, and we aim to help them choose better.
Lovely, thank you very much. And last but not least, James, if you could just again give us a quick overview.
Great. Yep. My name's James Buckley-Thorp. I'm the founder of Bequest, which effectively allows the millions of people in the UK who have no life insurance be able to get the protection that they need without the legacy barriers that currently exist within life insurance, such as having to see a doctor or having to supply actual paper evidence. Instead, with Bequest, you can get it done in a couple of minutes with no medical and no more than 14 questions. That's it.
Lovely, thank you very much. So we're going to come to ask some specific questions about some key sort of subsectors of Insurtech at the moment. But just coming back to you, Ori, regarding sort of the big C, which we've all been talking about for years and years, COVID and the pandemic. How have you seen VOOM's business model change and the general sort of market conditions adapt over the last sort of year or two?
So first of all, I think that everyone see that COVID had a very, I would say, an acceleration effect in terms of digital. Everything that is digital, all the tech companies were doing pretty good in this terrible situation. And I think same applies for insurance. So it was, I think, a relatively interesting but good time for Insurtech companies. We see many more customers go to the digital distribution channels. So that was something that was in the making all along, but I would definitely say it had a significant acceleration effects. And even more so, people change their behavior. They're commuting less, they're working from home, they're not necessarily driving as much. And the need for usage-based insurance rose even more. So people understand, wait, I'm still paying the same for my whatever, car insurance, motorcycle insurance, whatever, but I haven't used it due to a lockdown or just because I changed my commute behavior. And they no longer want to pay as much. So they opt for usage-based insurance, which makes pretty good sense with our platform.
Thank you very much, Ori. That's really interesting. James, maybe coming to you now. What sort of things have you seen over the last sort of year and a half? Obviously, we talked a lot about digital sort of transitions and more digital savvy and tech-enabled things. Is that a similar thing that you've seen happen?
Definitely. I would say that awareness to life insurance has certainly taken off. I'd say the industry of life insurance before the pandemic has always had an upward hill battle of trying to get people to understand that by getting life insurance younger, it's actually better for you, your family, and your finances. But that's always been a very hard and ongoing marketing campaign this industry has never stopped doing. So what the pandemic has done is it's shaken us all across the world of our own mortality. And what we've been able to track is that the 30 to 45-year-olds in the UK, this has been the biggest educational awareness campaign that they've ever needed in their lives. And personally at Bequest, we've seen a rise of 4,050% come and start seeking out life insurance. And these figures are UK figures specific. And that's huge. That really is people really starting to think, okay, I'm not going to be here forever. What is the impact of my loss going to be like on my family, my finances, and my assets? But also, I'm not just going to grab any kind of life insurance I can get my hands on. I actually want to get something that works and fits with me. And that's where Bequest, we've been able to kind of hit the ground running on two fronts. Both, we're completely digital autonomous, so very pandemic friendly. But also the second, which is I have control over the product as well, which largely our market wants when they have a financial product like this.
Excellent. Okay, it's really interesting. And finally, coming to you, Steve. Obviously, Confused.com has been around for quite a while now. So you sort of would have had a good amount of understanding of how your insurance products were being used prior to COVID. What's the sort of the general sort of reactions that you've seen in regards to insurance since the pandemic hit?
Yeah, I think there's probably 3 points worth calling out, Mark. I would say the first one is that we know that people are going out less and they're driving less, but that's actually quite a significant change. Our data says that people on average are driving 40% less, 40% less miles covered than they were pre-pandemic. And that's starting to come through in lower claims rates as well, which is good. And that's leading to lower premiums in many cases. I think what's also noteworthy is that people are driving at different times. There's less concentrated at rush hour, and in part, I would think that's driven by increasingly flexible working. We also hear from some partners that some customers are driving faster. I think that's perhaps people have got used to quieter roads. Obviously, not such a good sign now, and one to watch. So watch your speed with that in mind. But I think while people might be driving less, I wouldn't confuse that with less need for vehicles, which remain really popular with consumers. I think consumers are enjoying being able to control their personal environment. The way they use that is evolving though, and as Ori said, there's increased appetite for more flexible policies or policies that are more specific to their needs, and I think that's a really good thing. And we're really pleased to be able to help bring some of those products and businesses to market, because it's better products often, and more flexibility and more choice for consumers. The net effect of a lot of this, though, is that it's coming through in lower premiums for some customers. I think car insurance prices, they've seen the steepest drop in 6 years, and competition for consumers is high. And as a result, customers that are shopping around tend to be getting great deals. So that's kind of car insurance specific. I think second big one is channel, which has already been mentioned. For us, actually, this really started in early lockdown, where consumers had lots of questions and wanted to be on the phone with their insurers and couldn't get through, when these big insurance businesses were unable to quickly get their call center operations up and running. And so a lot of consumers had bad phone experiences, which drove them online, and they had good online experiences. And we've seen that time and time again, that when that happens, consumers don't tend to go back. So I don't expect that to reverse. And I think we've seen a step change in digital adoption in our area. And as I say, even though the phone lines are coming back on, I don't expect that trend to fully reverse. I think the final thing that's worth pointing out more on a kind of human level is appetite for savings have gone up. So personal finances are tighter. People are prepared to spend a bit more time shopping around to make sure they're making their money go as far as possible. And that's a trend worth calling out.
Yeah, that's really interesting as a sort of a general sort of trend and how people are sort of thinking about things differently given the pandemic. Ori, maybe sort of coming to you on that same sort of subject. Obviously, as we said earlier, VOOM deals with mobility, which is obviously a wide encompassing term. We've heard from Steve about cars and car usage. Have you seen a sort of an uplift in other modes of transport and other needs of insurance for those other modes of transport?
Very, very interesting question. Thank you. I think that one thing to note is that it's not only the models, the vehicles themselves, it's also the way, the model of ownership. Let's say if you own the car, or you rent the car, or if you share the car, if you're gonna ride a scooter, if you're gonna own a scooter. So it's the vehicle, but also the how you use it or how you own it changed a little bit more. So I think that we saw that people are all of a sudden less willing to go with public transportation, for example. You don't want to be in a crowded subway, so you might opt to take a scooter instead of that. Do you feel comfortable getting inside a taxi or not? So definitely, I think that e-bikes have been rising significantly in Europe, but also in the US. E-scooters, at the beginning, people were like locked out, right? Locked down, sorry. So they didn't really use it, and the scooter companies didn't really know what's going to happen. But then I think there was a shift, and people all of a sudden started choosing those models instead of public transportation, for example. And all of a sudden, this really creates an insurance issue, because people are starting to understand that there is an exposure that they didn't have before. Now, if God forbid you fall down while riding a scooter, you don't necessarily have the proper coverage for that. Or if God forbid you hit someone, there's a liability claim. Scooter companies won't take that liability on themselves. So there's an issue here, and I think solutions are starting to be rolled out.
Yeah, I think it's really interesting how, sort of, as we're saying, it's not necessarily about the different types of transportation on their own. It's more about the general way that consumers now utilizing different variations of mobility. And I kind of like coming to James on that sort of subject. I guess that kind of dovetails us a little bit into life insurance, because are you seeing that people are thinking about life insurance differently now? I know you mentioned in your opening, obviously young people are maybe a little bit more focused on, actually, maybe I should think about life insurance. But are you seeing the demands for types of life insurance changing in some way?
Definitely, yeah. This actually goes a little bit onto what Steve just finished up with, such as, seeing a trend of people shopping around. I think being in lockdown, we have been given more time to take consideration over what products we're getting. We actually spun out a will writing platform. It's free. It's not our core of the business at all, but we knew straight away that this was important. This is, I think they say 54% of the UK don't have wills. That's huge, and wills sits in nicely to life insurance. So we just put it out there. We're aware that there are companies out there that charge for this service, but we just had to get on with it and just get it out, and that has seen an influx. We're nearing 1,000 already. We launched this a couple of weeks ago. This is a free product, but this kind of like ties in nicely to the fact that people are taking their time. Wills is not a quick product that you do in the queue on your phone in the post office or whatever. Like, this is something that you dip into and dip out. And that's like what the pandemic has granted us as well. But the uplift, the searches alone are incredible, absolutely incredible. We create a lot of free premium content with our professional writers, both in life insurance and wills. And, you know, since the pandemic, some of these articles, which were some, you know, great for people and our users within the community, but some are now listing first, second, or third results on Google just because of the power of the amount of people searching. For example, one of our most widely read articles is "What's the definition of a next of kin?" So, and this has happened since the pandemic. So people are really starting to now, as Steve says, shop around, educate, learn more, get their own life admin in order. And the results this side has been phenomenal. The rise in life insurance has been the largest it's ever had in its entire history.
Yeah, I think that's really interesting. And sort of coming back to Steve again, obviously, we talked about people accessing things in different ways and different user. How do you think, or how has your specific technology had to adapt to actually accommodate this sort of new way that people want to interact?
I think in many ways, we've sped up on a lot of fronts, not just as a business, but as an industry. And I think all digital businesses have had to do that. I think a piece that sometimes gets lost, though, which we've worked hard to ensure stays, is the human element, is the human touch in the business. And so we noticed a huge amount of questions coming from customers looking to find out the ins and outs of what had been a product they actually hadn't thought about much before, which I think aligns with what James was saying. And a number of those questions, actually, that their providers, their underlying insurance providers, couldn't really provide them the answers to. So relatively quickly into early lockdown last year, we set up a coronavirus hub, which looked to answer consumer, the most popular questions we were getting from consumers about what kind of insurances, what it meant to cancel, how would do that. Do they still need insurance? Does it change if they need to work from home? And they had lots of basic questions that they struggled to get answers to. So we took some more staff on during that period, actually, to provide those questions where their customers could get them elsewhere. We built the coronavirus hub, which actually got a lot of visitors. So that was worth doing. And I think, and since then we've added that as one example because I think customers do have more questions than perhaps they did before. And I think the answer can't always be a digital answer. Sometimes people do need to speak to someone, or do need more of a human way to engage.
Absolutely. Small plug for our next webinar, which is about conversational AI, but we'll come back to that shortly. Ori, sort of coming to you, thinking about sort of like the technology and the user experience. Obviously, VOOM yourselves have kind of like set yourselves up to capitalize on that with multiple mobilities. What do you think is the key to your sort of user interface that enables customers to find what they need and find their answers quickly?
So I think that basically the most important thing is to keep things simple. Insurance can be complicated with a lot of different questions, factors, possibilities, options. So one of the things that we're trying to do in all of our products is basically try to assist you with, let's say, default values that are common, specific plans that you can choose from instead of having a long list of coverages to need to drop down, select this coverage, that coverage, include it or don't include it. You can customize everything you want. That's key. But to start with, you'll have the options, for example, to really understand what you need. And I think that for us, it was pretty easy because we were digital from the get-go, and all our system supports it, and the user interface supports it, and simplicity was always there. I think that the challenge for the incumbents and the big insurers is how to adapt for that, because I think that for them changing stuff is a bit harder. And another thing that I will add on that is not only the user interface on whatever platform or whatever product you're searching for. Also, a very strong trend currently is embedded insurance. So, having your insurance API ready, let's call it that way, and then embedding it with other life events that happens to you, whether that's the most, I think, common example is when you get a mortgage, right? So you're offered home insurance, but this could be in many other occasions. If you're trying to rent a scooter with a scooter company, now you might be offered insurance for that ride, and pay just for that ride, for example.
Yeah, it's a really interesting sort of area. I think I'm going to try and expand on that a little bit with you, James, talking about sort of it. We've kind of, I guess, consumers have come to a point of where they feel like they can pick and choose bits and different terms and things that they want. And it's very much of a sort of like the modern era is that, well, I only want that, but I only want that for half the time, and I only want that time. How has that affected sort of life assurance? Because obviously that traditionally, you've got, big providers that just generally, right, here it is, it's X amount a month, this is what you get, go away and come back when you're dead type of approach. How has that sort of morphed and moved forward?
So a really clear example is looking at the generational uptake of life insurance. And the 30 to 45-year-olds have not taken up life insurance as quickly as the generations before it. And there are identifiable reasons to this. There's actually quite a few. The ones that we're addressing are the most important, which is the desire to be autonomous. So us guys right now, we could set up a bank within minutes with one of these fintech apps, one of these neobanks, but if we wanted to get life insurance, that is not going to be as easy as setting up a business or even a bank. That's crazy. That shouldn't be the way. So people have an expectation. Millennials have an incredibly high expectation that they should be able to do it themselves. And if they can't do it themselves, why? Not, I will figure my way out. I want to know why I can't do it myself. So the second issue that we're addressing, not only autonomous, but also making the small print big. So that's the education. So as long as we can combine education and the ability for someone to be able to do it themselves, that's where the consumer's mind is at. And that's where the industry needs to get to as well. But life insurance is a complex product. It requires a lot of inputs and outputs so we can understand your risk, so then we can make sure that you're covered, but covered correctly as well, that you have enough cover. There's an underinsured issue throughout the UK at the moment. There's people who don't have enough cover out. So for us, we have to make sure that you can do it on your own. Then we remove the broker from that relationship, but also that the education, that enough practical information is available, either online or via our live chat. That's where we can capture people. That's how we actually really push this area forward. And then actually, so the day-to-day management, people can sign in, they can see their policy, they can amend their policy, which traditionally in life insurance, you would usually buy another policy. You might have 3 or 4 life policies by the time that you retire. With us, we want to keep that conversation going. So you update that policy. You have a second kid or you move into a bigger house, sign back in, increase or decrease your payout. There's no need to keep buying additional policies. This comes with the tech advances that we can make now, but also then putting that autonomy into the user's hands.
Yeah, it's really interesting. As you say, it's kind of like it's more of a you want to work with the consumer and carry them on along the journey rather than sell a bit of life insurance and then come back later sort of thing, as you're saying, which seems to be pretty good.
Definitely. Yeah. And like the amount that we can learn is such a benefit to both the industry and the user. You could have a customer that takes a policy out for a certain amount of protection, but just doesn't know that maybe if they take out a life insurance elsewhere, it will be subject to inheritance tax. If they come to Bequest, they're informed and they can actually click a button and then we will put it into trust. So it's not going to be, so it'll be exempt from inheritance tax. There's this kind of conversation that's usually reserved for the wealthy who can afford a financial advisor, that no longer need to make that expensive appointment. And that's all from data, that's from learning, that's from having that conversation. So we're very pro having that conversation with our users.
I think that's really interesting. I think, and we're going to get into probably one last question for each of you. We're going to get into a bit of future gazing, which in current climates is quite difficult. But Steve, coming to you, based on what sort of James was just sort of saying, we're talking about fundamentally people sort of thinking about insurance in a different way. Insurance, don't take any offense of this, has not been a massively sexy subject for many years. But do you think it's now, it's prime in the middle of people's viewpoint? And what do you think it's going to do in the future?
Mark, just to confirm, was that aimed at me? That I had an internet blip just as you started the ask of that question?
Yes, it was. Sorry, Steve.
Well, yeah. Thanks a lot. So I think there's three things, really simple things, that I think this is setting up. Overall, it's better products, better service, right? So I think opportunity to offer better products. As an industry, we've got much better access to data, and much better handle on being able to use that for the benefit of customers. There's things like the open finance movement, which gives customers more control over their data and allows them to put that to their use through businesses like us, like the folks on the call. And so I think that's a real strength in terms of being able to bring new products to market. Secondly, elements of the stack are now built and reusable, and so it's not an enormous initiative for new providers to take new products to market. And I think that's great. That's ultimately great for consumers. Secondly, I think this sets up more tools for consumers to be able to get the right service they want, in the way they want, in the channel they want. So I think that's that sets us up for a better experience through the lifetime of owning and using these products. And thirdly, and I think this is a really interesting area we're getting into now, is about reducing the workload for consumers to choose and use these different types of products. And as Ori said, it's often this is about keeping it simple for consumers. And I think that's not just simple to choose and simple to use, but it's also simple to know that you have a need. We're getting better, I think, at being able to detect when consumers have a need and they have an opportunity to save money in our case, or they've got a gap in the products and services they use and that needs to be filled. And I think that's really important. So the onus of having to do the admin around it is not always on the consumer, but increasingly we're playing a more active role in that and able to help consumers save. And ultimately, as you say, insurance is not always a sexy topic. And so how can we make that easier for people and give consumers time to spend doing other things while having the peace of mind to know they've got the right type of cover at the right price and they can spend the time elsewhere.
So not sexy, but practical is what we're going for. Ori, maybe coming to yourself, thinking about what's the future going to hold, and I'd really like to hear your views on mobility and how that's going to change, into the future as well.
Thanks. So first of all, I think that from everything that we've discussed so far, it looks like the future is going to be better for the customers because everybody wants to help them, everybody wants to educate them, everybody wants to make their life simpler, cheaper. So I say, let's go, let's do it, right? So I'm optimistic for the future. I think that the number one thing that will impact both user interaction, but also prices, premiums, claims, all the value chain is going to be data. And I think data is key. And if you mentioned mobility specifically, going towards the connected world, and being able to more accurately assess risks on the move, I think that's going to be key. And if we can use the data smartly, that's going to be in favor of everybody in the value chain, but specifically for the customers.
Excellent. That sounds good. And again, last but not least, James, maybe you could give us your viewpoint on how things are going to be progressing into the future.
So the future actually excites me a lot when we talk about Insurtech. For me, the biggest win the consumer will experience is further collaboration between Insurtech and insurance players, the reinsurers, the underwriters, right down to the Insurtechs focusing on data and distribution. You know, there is no way we could have built Bequest if the Insurtech industry was closed doors. So we rely on our partners, you know, Covéa, Berkshire Hathaway's Gen Re, even Aviva, literally so many reinsurers and insurers that we speak to day in, day out, so we can push products, so we can make sure that we're thinking about the right things, and then also being able to make changes to policies, to the legalities around how policies are created. You know, we can be very agile as a startup, but this industry still needs the full linear model. It's very different to the fintech industry, where neobanks directly challenge the traditional banking world. In Insurtech, we see Insurtechs actively working with the large insurers for the benefit of the industry, but also the consumer. And already we're, I would say, leaps and bounds further than fintech. And I hope and I foresee that being the future with insurance, far more collaboration. It's just so untapped. There's no reason why it shouldn't be even greater than it already is.
Thanks very much, James. That's really interesting. I would love to have a further conversation about that specific point where it's more about cooperation and that, but unfortunately we've run out of time. Maybe the situation, we've got a partnerships webinar later in the year. I'm going to get you back and we'll talk about that to the death. Thank you all so much for giving up your precious time. Really appreciate you taking the time out to talk to us here. Thank you all for attending.
Thanks, Mark. Thanks, everyone.
Thanks for having us.
Thank you very much.